Alright, now for the same set of question, can we turn to question 2? Okay. Now what it asks us here in 2 is prepare a report that Kenny is required to provide for the board meeting. Now they're asking for a report, right? So in the exam, we have to produce them in the format of a report. Okay. Now you should deal with the following aspects. The requirement is in page 51. Okay. Now you have to deal with the following aspects. Number 1, now come up with the provisional computation of their tax liability for Y 2009 without taking into account of either item 7A or B. Without, that means don't bother. Clearly identifying the amount of any unrelieved exemption losses or CA. Let me just do a tax com without taking into account items 7A and B. Now what's A and B? You'll see the question, okay? Now explain and quantify the tax consequences of bringing either or both items 7A and B into year 2009. Now, the consequences of bringing either or both 7A, 7B, meaning that means you have A, B, A and B, right? Either or both. That means either or both. That's what they're asking. Now, any increase in cost as a result of bringing forward the contract should be ignored. Now briefly explain whether it is advantageous from the tax point of view to bring forward to 2009 either or both item A or A and B above. That means you can explain, okay, whether is it better or not. Okay, professional marks will be awarded for your format, content of the report, effectiveness of the information. Now state and explain whether is it possible for tuition fee earned by SMTech at its premise in Malaysia can be taken into account as qualifying service to foreign client. Now most of the tuition fees paid by the individuals are paid by individuals receiving tuition, but some are paid by sponsoring employer. So those who are paying are individual employer. Okay? Alright, so let's see what's in this question. Now SM is a Malaysian resident company providing information and communication technology services, IT service. Now the directors have identified the need for some pre-year-end tax planning and have asked Kenny. So the person is Kenny. So the one who prepared is Kenny. Their in-house accountant, who is also an ACCA graduate, to prepare a report for the forthcoming board meeting. So this report is addressed to the board of directors of SMTech. Now all these things is very critical one. If you write them wrongly, that means you don't know what is happening already. Okay? Now the following information is available to Kenny for year ended 31st December 09. Now, gross revenue, their sales, ICT services provided to foreign client, to non-foreign client. Fees earned from tuition classes on the company's premise. The sale of hardware and software. The cost of hardware and software. This is the cost. So now they give you the GP. That's the gross profit. And overheads here we have salary. We have director fee. General overhead, depreciation, profit before tax. Now the following information is available to Kenny. Number 1. Providing ICT services to foreign client is one of services specified for purpose of exemption for increased exports of qualifying service. Now this is an incentive, right? Export of qualifying service. So if we say exemption for increase in exports of qualifying service, what's the exemption rate? Service is 50%. Across the board is all 50. There's only one that's 100 when you fall into healthcare. And the healthcare has a different definition of what is called foreign client. Okay? Now the rest, the definition of foreign client is the usual one that we see. Okay? Now, so this is what they tell us about the incentive. There is an increased export. Now the revenue from provision of ICT services to foreign client, the revenue provided to foreign client for 2008 was 80,000. Now why must they give this figure to you? So that you can calculate how much is the increase one. Correct now. So they give you the last year figure, so you will compute how much is the increase. Okay, the amount of unrelieved exemption for increased export of qualifying services. So the unrelieved exemption meaning the unabsorbed export allowance, correct? From year of assessment 08 is 80,000. Okay, unabsorbed business losses brought forward 85. CA for 2009 is 65. Exempt account balance is nil. Now following items are expected to occur in the year 31st December 2010 that they have not taken into account. 2010, next year. Now 29. See carefully the date. Okay. Okay, so they plan to have capital expenditure to buy computer IT equipment to re-equip their tuition center for 75,000 ringgit. And this is eligible for accelerated CA 2080. Now buying computer equipment, you can claim a faster rate of CA at 2080, and this rule is valid until 2013. That means this exam you still can apply on. Can you see not? Okay. So this rule is valid until YA 2013. Okay. Now there will be no balancing adjustment for the disposal, so you just ignore it. Okay. Now the gross revenue from a substantial contract with an Indonesian client is 120. So you're gonna have a sale to a foreign client which comes to 120. Okay. Now so now they say without taking into account 7A and B. Okay, without taking into account 7A and B, work out how much is the tax computation for Y09. So it's just a normal computation with export allowance incentive. Okay. Now, when you have a questions like this in the exam, you need to write a report. Okay, you need to write a report. So the report will carry all your explanation. Now, for purpose of professionalism, we always prefer the report is in the front, then the appendix is at the back. Okay, so you always leave space for report, Now you leave more space also never mind one. Let's say you leave 2-3 pages blank, and then after that you just go to the back and start with appendix, then you show the calculation. Okay, so it's not very professional if you give people computation. Is that the moment you receive report, the first thing you open is working. Then after you open, only the report comes in. So you don't do like that, can you not? So the report comes first. So you just leave enough pages. If later got blank, you just cut it off. It's okay, right? Can you not? Okay. So it's just a matter of presentation. But in the class, I just let you know you put the report in the front. But here we have to start with the working. Okay. So this is my appendix. So tax computation for part A1. You try for me. You've got all the numbers here. So you're going to start a tax com, okay? Start filling in the numbers. So how do you start? They give you profit before tax. All the while they give you adjusted, then you take adjusted minus CA. This is profit before tax. So if profit before tax, then what do you do? Then you ask yourself, what is in the P&L that you need to adjust, you adjust back. For example, if you got investment income, you take it out. Non-deductible expense, you add it back. Double deduction, you minus again. It's a corporate tax com, can you see not? So in this case, we're going to add back just the depreciation, 15,000. So you get back to adjusted look. Okay, this is only different. So examiners start with profit, so you calculate until adjusted. Okay, if they give adjusted, then you got the figure straight. Okay, so from the adjusted income, you claim CA, right? Okay, when you claim CA, you only claim CA based on note 5, 65,000. So statutory income is 100. How does this incentive work? just like RA, ITA, right? From the statutory, you absorb the allowance. Now the only difference is the way how you derive the allowance. So here is where you have your export allowance absorbed. The rule is the same, right? Maximum 70% of your SI. Alright, let's see how much is your export allowance. Okay, I show the working at the bottom. Now export allowance is based on 50% of increased export. What is increased export? Your export sales this year minus with last year. Okay, so my export sales to foreign client. So what's my export sales to foreign clients for year ended 09? 120. The export sales to foreign client for Y08, and how much is that? $60. Sorry, 80. So the increase in export sales is 40,000. Now exemption rate would be 50%. So export allowance claim in Y09 is 20,000. Any unabsorbed from last year? Yes, right? So the unabsorbed balance brought forward is 60. So you minus export allowance absorbed. How much can you absorb? So follow back the statutory income figure we see just now. The most you absorb is 70,000. So you just minus 70. So there's still a 10,000 carry forward. Okay, then bring that 70,000 on top. So minus this 70. Okay, now after you absorb 70, left with 30. Now what other adjustment do I need here? So they mentioned that you have an unabsorbed business loss. There is no investment income. So that's all only. There's no donation as well. So in that case, this is the net business SI. That's where you minus unabsorbed business loss, which is 30,000. That's the most you can claim, okay? So this is my aggregate total chargeable income. nil. So the tax liability is nil. Okay? You're sure you don't just put income nil and stop there, right? They ask you to compute the tax, there's no tax. Okay, so what will happen to these laws again? You carry forward the 85,000 minus 30, 55,000. Okay. Now, so the amount that you absorb 70, then you carry forward 10, you show at the bottom, this is the loss carry forward. Now, this amount you absorb, you credit to tax exempt income account. So if they ask for tax exempt income account credit, then that's where the 70 comes in as well. Okay. Alright, so this is part A, number 1. Okay, now we just show the computation. So now we ask you in number 2. Okay. Now what will the tax consequence be if you bring either or both A, B into 09? You bring them forward because they plan to have these two things in 2010. So if you bring them forward to 09, what will happen? Okay. Now, so this one, it will affect your CA because you're going to claim CA. And B, this one will affect your sales, your export sales. Okay. Right. Still my appendix for A number 2. So we just need to do a summary of tax implication. Okay. That if we bring forward into 2009 item 7A, B, and then A plus B. Okay. Now, what issue that you're going to see here? Now, item 7A, you're going to get capital allowance. Okay. Now, how much capital allowance you're going to get? It's going to be 100% of 75K. Now, just show here lah. Okay. You're going to get CA 75,000. (7B) now you're gonna get your more increased export allowance. Now, if you export another 120,000 extra, then the increased export will be 120 extra. Then you take half of it, so it will be 50% of 120. So you will get an additional 60,000. Okay. Now, how much was the registered income earlier? $165. Okay. If item 7B you bring in, then how much will the registered income be? You got more sales, right? You export, then you get more sales. So the additional sales of 120 give you additional revenue. So your income must increase by 120 lah. Okay? Okay, CA. Now originally the CA was 65,000. Now you get an additional CA of 75. So CA is 140. This one? $65, 140. So the statutory income is 25, 220, 145. So from the SI, you will claim export allowance. Now in this case, most you can claim is just 70% of the 25. That means you get 17,500. See, for item 7B, you take an additional 60,000, correct? No? And just now you already have $80,000. So 80 plus another 60 is 140. Follow? The 60 is the increase in the export if you bring forward, plus just now got another 80, so in total is 140. Now maximum is 70%, so this is within maximum, so no problem, you can claim all of it. But the 145 you can only claim 101,500. Okay, so the net figure is 75, 80, 43.5, and what you do after this is to claim unabsorbed business loss. Now the unabsorbed business loss was 85,000. So the most you claim is 75, 80, 43.5. So eventually your CI will still be 0 for all the cases, right? right, your tax exempt income account credit will be 17.5 140 1015. Now your export allowance carry forward. Now item 7A, your allowance was 80,000. You only absorb 17.5. So you're gonna have 62,005 carry forward. This one fully absorbed. Here 140, so you have 38,005. Okay. Now the main figures that we need, we've done them. Okay. So when you write the report, you just have to tell in the report what you see in the numbers. So for first part of the report, you just have to tell them that without taking into account 7A or 7B, that this company Azamtech will have no tax liability for Y09. Okay, so you just show them what you calculated. That means you explain to them in the numbers that you will not be having any tax because your income is zero. And the reason why income is zero is because you're able to absorb an export allowance of 70,000, which is based on maximum 70% of the 100, and taking into account the unabsorbed business loss, that's why it's zero. Now you just have to explain what you computed. That means what you see in the numbers, you write them back. Okay? Because they ask for a report. You cannot just put this and then expect examiner give you all the 10 mark. The 10 mark is only given if you write. So probably computation may carry about 5-6 marks only. The other 4 marks or 5 marks is when you write back what you see here. So you have to write. Can you see not? Okay? Now, so I don't want to waste time and write again. It's just telling back what you see in the number. You refer to your answer by the examiner, you can see the idea. Okay? Now, then number 2, you will tell them a summary. That if you bring forward item 7A, B, or A and B, then you realize that there will be no chargeable income, that there will be no tax. But obviously the difference is in item 7A, the amount of exempt credit is different, allowance is different. Okay. Now in this case, you find that credit is different, allowance is different. So this one is fully absorbed because the SI is greater. Okay. Now that's the main difference. Now then they ask you to comment in number 3. Now do you feel that is it more advantageous or not to bring forward either or both? Now do you think that any of the 3 numbers that we see here, that it will be better compared with what we see here? So which one do you feel got different or not? Now of course in the first glance is I really see for Y09 there's no difference, right? Here got no tax. This one also got no tax. This one also got no tax. This one got no tax. Can you see now? Now then number 2, you can claim more CA. Now the claim of CA is not an incentive really, right? Because when you have an accelerated claim, 2080, even if you delay, let's say I delay, then I don't get 2080, but I still claim the all full amount. Can you see now? The only difference is timing only. I still get back full amount. I won't be penalized. And if I claim more CA, it will only affect me in terms of the speed of claiming the allowance. So whether I claim more allowance or less allowance. So seriously, there's no difference. But will there be a difference if you bring forward the contract? Now, if you look at the examiner's answer, he also said that there's no difference. But I don't agree. I think that there is a difference. Okay. Now, see, the revenue that you bring forward, will there be a difference or not? Depends on how much revenue you project you're going to get in 2010. Okay. Now, why we say like that? Okay, 09, 08, and 10. Let's do a very simple illustrative figure. 08, you tell me the export sales was 80,000. 09, you tell me export sales is 120. Now, right now, I don't know what's the sales for 2010. What if your 2010 sales didn't go up? What if it goes down? Now, I don't know. Let's say, what if my sales for 2010 is 100 plus the 120 because of the Indonesia? So my increase is 40, 220 minus 120, increase is 100. If you take 50%, it will be 2050. Now that's the allowance you claim. You notice? Now that allowance you claim is based on the condition that your export sales is 220 lah. Now I really don't know what the question never tell me. So if you foresee that 2010 the result will be like that, would it be better if I just make it in this way? 80, 240, 100. I bring forward the 120. Now once I bring forward the 120, then my increase will be 160. 100, no increase. So my export allowance is 80 and new. Now it has a difference, okay? See, the answer at the back, examiner say there's no difference. Now I don't agree, okay? So there is a difference, because end of the day, if the sales performance in 2010 is not good, it affects us. But if let's say the sales in 2010 is above or same as 2009, then there's no issue. If let's say the sales in 2010 is 120 plus 120, then there's no difference. But if the sales in 2010 is below what we get now in 09, then there will be a difference. Then it's better you bring forward. Can you see now? Okay. Now this is what you're going to explain here in part B number 3. Now I just write down the explanation. Okay, I'll put down the points. Now, in terms of tax liability, there's no difference, because in all cases Y09 we have nil tax payable. Okay. Now to bring forward the ICT asset, can speed up the claim of the CA. But again, there will be no tax difference, since SM tax can still claim the CA regardless of the timing incurred at the same equivalent total amount of qualifying plant expenditure. Okay, so it is merely a timing issue of getting the CA. Now the CA will affect statutory income, which will then affect the timing to absorb export allowance. But again, the total amount to be absorbed will not be affected, since you can carry forward indefinitely. So based on this issue, item 7A has no tax effect to SM tax. Whether you do it or not, it doesn't matter, okay? Now, but for item 7B, it depends on what is your expected export sales for 2010 before the Indonesia sales. See, if the amount is less than 120, then it's actually more efficient to bring forward the Indonesian contract to 09. Okay, that's all on the point. Okay, so if it's more than or equal to 120, yes, there's no difference. But if less than, you bring forward, you claim more. If you wait until next year, you claim less. Okay, yeah. Right, these is the answers to part A in the points. Read the examiner's answer for the full answer. Now look at part B, please. Now B, they ask us to state whether is it possible for tuition fee to take as qualifying service to foreign client. Okay. Now there are two issues that we need to see here. Now I just write here lah. I got no space already. Okay, I just write here. Now there are two issues. See, you can only qualify for the exemption if this is an export sales of qualifying service. Okay, and what qualifying service are we referring to in this case? Now right now they are saying service in the sense of ICT service. To SM Tech, okay, is ICT service. Now, but the case clearly mentioned that what they are doing now is providing tuition. Okay, so whether tuition fees can qualify. Now then it depends on whether tuition fall into the scope of ICT service, which looks like not lah. You're doing IT one, and you're not doing education. Can you see not? Okay, so in that case, that tuition may be unlikely. To be ICT in nature. So unless you can put it in such a way that the training is incidental to the ICT that you provide. But if this kind of tuition that you provide is a very normal kind of tuition which stands alone by itself and has nothing to do with all those services you provide to the client, then it's very hard to put a link at it. If there's no link, then you cannot call that as your exports of qualifying service. Okay, so this is one issue. Now then the second issue is, even if it's qualifying service, it must be an export sales. Now an export sales must be export sales that you provide to foreign client. So what do you mean by foreign client? Now they mentioned that the one receiving the service are basically individual and employer. Employer company. Okay, so if we talk about individual and employer company. So if it's companies, then to be foreign, they must be company incorporated outside Malaysia. So right now the employer that they pay the tuition fee are those Sendirian Berhad, then cannot. They are not even a foreign client in the first place. So foreign must be a company incorporated outside Malaysia. So is this one fulfilled or not? I must check this. There was a definition of foreign client in terms of individual. Then it must either be foreigners, non-Malaysian citizen, that they do not hold working permit. Correct. So the moment you have a foreigners that hold working permit, then we don't regard that as foreign client. And it can also be non-resident Malaysian citizen that is now staying abroad. Okay, I refer back to the note when we talk about export of service. We mentioned to you what is foreign client. But then the definition is a bit different when it comes to export of healthcare that qualify for 100%. That one is more strict. That's why the definition of foreign is different. Now the rest all the same one. Okay, so this is the meaning of foreign. So in that case, whether or not you qualify will depends on whether you fulfill this and this condition. Now you don't need to conclude, you just need to know only. Where examiner just want to test you whether do you know these two things. Now if yes, then okay, then you can follow. Okay, right, so that's another question here, question 2.